Seeds of Wisdom RV and Economic Updates Sunday afternoon, April 27, 25. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Good afternoon. Dinar recaps. Federal taxes to be substantially reduced once tariffs set in. Trump. The U.S. president previously floated the idea of eliminating the federal income tax altogether and replacing it with import duty revenues. United States President Donald Trump recently said that federal income taxes would be substantially reduced or potentially eliminated once the tariff regime fully sets in. In an April 27 Truth Social post, Trump added that the focus of the purported tax cuts would be on individuals making less than $200,000 per year. The U.S. president also said that the External Revenue Service, a reference to funding the federal government exclusively through import tariffs instead of the current model of collecting taxes through the Internal Revenue Service, IRS, is materializing. Eliminating the federal income tax would likely be a positive catalyst for asset prices, including cryptocurrencies, as the increase in disposable income should partially flow back into productive investments. However, this stimulative effect is not guaranteed. Trump's plan leaves analysts and markets doubting. Trump previously floated the idea of eliminating the federal income tax in an October 2024 appearance on the Joe Rogan Experience. Although Trump, who was on the campaign trail at the time, provided scant concrete details on the proposal. The U.S. president suggested that replacing the federal income tax with revenue from import duties would return the U.S. to a time of prosperity seen during the Gilded Age, in the 19th century, when the U.S. did not have a permanent federal income tax. Research conducted by accounting automation company Dancing Numbers found that Trump's proposal could save the average American $134,809 in lifetime tax payments. Dancing Numbers added that the tax savings could be as much as $325,561 per American if other wage-based income taxes are also eliminated. On April 2, Trump signed an executive order imposing sweeping tariffs on all U.S. trading partners, which included a 10% baseline tariff on all countries and different, reciprocal, tariff rates on countries with import duties on U.S. goods. However, since that time, the Trump administration walked back its tariff policies several times, flip-flopping on tariff rates and when the tariff regime would fully take effect. The Trump administration's ever-changing rhetoric surrounding trade policies has heightened volatility in the U.S. stock market, caused a rise in U.S. bond yields, and has drawn widespread criticism from financial analysts who say the protectionist trade policies hurt capital markets while achieving little else. BRICS. U.S. sanctions fail as Russia's economy grows 4.1%. The U.S. pressed sanctions on Russia in February 2022. After they invaded and waged war on their neighboring country Ukraine. The sanctions were aimed at stalling Russia's growth and bringing its overall economy and GDP down. Russia teamed up with the BRICS alliance and the bloc kick-started the de-dollarization agenda to counter the U.S. sanctions. The BRICS bloc rewrote trade deals allowing Russia to send and accept local currencies for trade and cross-border transactions. China, India, and Saudi Arabia made use of the U.S. sanctions and procured Russian oil and discounted prices. Saudi Arabia even brought Russian crude oil for a concession and laundered it all over Europe, earning bigger profits. BRICS member India even saved $7 billion in foreign exchange by buying Russia's crude oil at cheaper prices due to the sanctions. Therefore, the BRICS bloc mostly benefited from the U.S. sanctions, saving and earning billions in development. They even pushed local currencies ahead for trade, strengthening their businesses and overall GDP. BRICS. Russia's economy grows 4.1% despite U.S. sanctions. Trade restrictions could not stop BRICS member Russia's growth as it immediately kick-started the de-dollarization agenda. The move helped the country navigate through troubled times and simultaneously gained the support of developing countries. Over the past 2 years, the Russian economy grew by 4.1%, said Russian Security Council Secretary Sergei Shoigu. The latest data shows that BRICS member Russia's economy comfortably sat above 4% despite the U.S. sanctions. 2023 to 4.1%. 2024 to 4.3%. 2025, projection, 2.5%. Shoigu explained that BRICS member Russia's banking system demonstrated remarkable resilience during the US sanctions. Russia's external and internal debt has diminished. Its financial and banking systems demonstrated resilience, he said. The diplomat added, the external trade also retained its positive dynamics. Despite sanctions, the past year's trade grew by $3.8 billion to over $716 billion. Proficit of the balance of foreign trade gained $7 billion, reaching approximately $146 billion. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: Dinar Recaps.